Hello guys, you're welcome to this video. In this particular video we are going to be discussing the bat pattern. Guys, we're going to be discussing the bat pattern. So basically I'm going to be explaining how to spot the bat pattern with ease, right? So first of all, the bat pattern is a type of harmonic pattern made up of 5 points. Point X. I'm just going to be showing a practical example here. Okay, it's made up of 5 points. Point X, point A, point B, point C, and point D. Right? So it's made up of 5 points: point X, point A, point B, point C, and point D. It forms an M, right? An M or W shape. Because this is a bullish pattern, perhaps after we're done with the bullish, I'm going to check if I can find any bearish pattern as well. So because it's a bullish pattern, then it is an M form. If it was a bearish, it's going to be in a W form, right? So that is the shape that the bat pattern forms depending on the market direction, and it represents potential reversal points. So now here's how the pattern should look, right? XA is the first leg. XA is the first leg. From point X to point A is a sharp move, either up or down, as we can see. But in this case, it is up, right? Because this is a bullish pattern. So it's a sharp move up. Then the next leg, being the AB, is the retracement of the XA leg. The retracement is typically around 38.2% to 50% of XA, but it's not like going to be like that. It's not exactly going to be like that always. Okay, in some situations it could be more or less, but like typically it could be between 38.2 to 50%, right? But it's a retracement basically. Now BC is the continuation. This leg continues the retracement, right? It's a continuation, typically between 38.2 to 88.6% of AB, right? But doesn't mean that it's always going to fall within that percentage, okay? Then CD is the final leg, which retraces a portion of the BC leg, right? You can see that this is the BC. The CD retraces a portion. It's not exactly completely the whole BC that it retraces, but it's almost everything. But the percentage of retracement is not fixed, right? But it retraces a portion of the BC, and then it completes the pattern to point D. This is where the pattern completes. You can see the M pattern completes at point D. The most critical retracement is from point X to D, which typically retraces around 88.6% of the XA leg, right? So now, when you want to use this pattern, the most important part of the bat pattern is point D, where the pattern is completed. You know, the pattern started from X and it ended at D, right? So the point D acts as a potential reversal zone. It acts as a potential reversal zone. Now, the XA is where the reversal is most likely to occur. The XA legs 88.6% retracement. Like we can see that point D retraced. Let's just use the Fibonacci to confirm this. We can see that point D retraced over about 61.8% of XA. We can see that this is XA. Well, the point where point D retraced to is about 61.8% of XA. And now around this point, this is where the reversal, or would I say the continuation of the bullish move or the reversal of this retracement is about to really occur. As you can see that right after this point D, you can see that the bullish move continued or the bullish move regained momentum, right? You might want to use your Fibonacci levels to alongside this bat pattern. Yeah, using the Fibonacci retracement tool alongside this bat pattern is going to be really effective, right? So now, once you have identified the bat pattern, you can consider placing your buy trade. Remember, this is a bullish bat pattern. You can consider placing your buy trade right at the D, right at the point D, expecting a reversal in the opposite direction, which is going to be in the bullish direction in this case, right? Now, your stop loss, it is recommended to place your stop loss slightly below the X point of the pattern to protect against false breakouts. So it's not good that you just set your stop loss right below the D point. Instead, you should set your stop loss right below the X point. Okay, and then as for your profit target, you can decide to set multiple profit targets using the Fibonacci. It's advisable to use Fibonacci to determine your profit targets, right? Now we are going to draw our Fibonacci using, we are going to draw from point A to D, from point A to D to determine our profit target. Remember, point A to D, you're going to draw to determine your profit target. Now remember that you entered around point D, right? Your stop loss is below point X, and then you take profit multiple targets. You can decide to take a profit at 100%, at 161.8%, at 261.8%, or at 423.6%, right? Depending on your patience to hold the trades or your profit target. You can decide to have a specific profit target, maybe using a risk to reward ratio of 1 to 2. Perhaps if you're risking like maybe if you're risking about 36, 35 pips, might want to use a and you want to use a risk to reward of 1 to 2, perhaps you can be considering making like 70 pips. So maybe your target could have been at the 161.8%, and you can see that price actually got there. If your profit target is about 1 to risk to reward ratio 1 to 3, then maybe you would have considered using the 261.8% on the Fibonacci retracement. Okay, but just make sure that the higher or the farther your profit target is away from your entry, it's good if you can trail your stop loss. So maybe if you are targeting a higher profit target, you might want to be trailing your stop loss after the price gets to each of these Fibonacci levels. Maybe when price gets to 100%, you might want to bring your stop loss upper than your initial position. For example, from the X point, you might want to take your stop loss to break even once price gets to 100%. Then when price gets to 161.8, you might want to take your stop loss till below the nearest swing low. As price gets to 261.8, you might want to take your stop loss to the previous Fibonacci level. As price gets here like that, you can just be trailing your stop loss. But basically, your take profit targets should be determined with the Fibonacci retracements. Okay, now let us see if we can find an example for the bearish bat pattern. Let us see if we can find a good example for the bearish bat pattern. Okay, just looking to see if we can find any. Okay, sorry, just stick with me for a bit. um Okay, I can see a W pattern here, a W pattern, although the retracements were quite long, as we can see, the retracements were quite long, but I just needed to show a bearish example as well. Okay, so now this is going to be our X point. It's going to be our X point. This is going to be our A point, right? And this is going to be our B point. This is going to be our AB. Sorry, this is a mistake. This should be our B point actually. This should be our B point. And then the A point is around here because this is the reversal point, the next reversal point, the next reversal point. So then this should be our C point, right? And then finally our D point. Okay, so the back pattern is relatively easy to spot. It may not always show up in the chart, it may not always show up on your chart, but it is not difficult to spot, right? All you need to be looking out is for a W pattern, like we can see here, W pattern, or an M pattern as we previously located. The W pattern is for a bearish, while the M pattern is for a bullish, right? So now we can see that given this example, our entry point is going to be at the D point. Remember, the entry is always at the D and the stop loss is always at above the X. Now for a bearish trade, right? For a bullish trade, it was below the X, but for a bearish trade, because the pattern is now having the X above, it's now going to be above the X. And then your take profit levels, remember that you will draw from X to A. So it's going to be from A to X. It's the other way around. The other way around. So the Fibonacci, in order for you to spot your profit targets, remember that we're going to have multiple targets. Your entry point is at D. Then your multiple targets, you can have targets at 100%, at 161.8%, and so on. But you should have realistic targets. Okay, you shouldn't like want to target very far distance. So as we are entering at the point D, 161.8% would have been a good point for our take profit, considering the fact that our stop loss is about 35 pips. So 87 pips is going to give us a good risk to reward ratio, because this 100% was just about 44 pips. So 161.8% would have been a perfect spot for the take profit level. So that is it, guys. We have looked at the bullish back pattern, and now this is the bearish back pattern, and we are able to identify how to enter and exit our trades using the back pattern, how to get your buy signal and your sell signal, where to set your stop loss and where to set your take profit. So I hope you found this video insightful. Kindly like, subscribe, and hit the notification bell so that you can get updates on further videos for more trading insights. Cheers and happy trading.